And we are starting at the end of one week, beginning another. With that in mind, we're going to start in the same place we usually start, and that's here on Earnings Whisperers. Here's the calendar of the releases for the upcoming week. We get a lot of big names, which isn't too surprising given the time of year. So, something to pay attention to. And if you are trading earnings, I wish you the best of luck. Um, let's move on over. That's been about long enough. Let's move on over to the economic release calendar to see what is coming up. Also, going to be a fairly big week, I believe. So, we got durable goods on Monday. We have got consumer confidence report on Tuesday and the new home sales. Both of those coming out at early in the market day, not pre market. So, keep that in mind 9 o'clock Central Time, 10 o'clock Eastern. You're going to want to pay attention to that. Wednesday is going to be fun. We have the FOMC announcement, which means that the meeting is actually starting on Tuesday, but we get our announcement coming up this Wednesday. That is, of course, 1 o'clock Central Time, 2 o'clock Eastern Time. So later in the afternoon, and of course, Jay Powell be talking after that. But earlier in the morning, of course, we've got these other factors at play: durable goods, international trade, and the petroleum. Moving on to Thursday, always have jobless claims, but also U.S. international trade. And finally, Friday, we have PPI, final demand, being released in pre-market. So there's your economic data releases and times to be aware of in this coming week. Put those on your calendar. Go find the calendar, CME Group. And finally, sector tracker. How do we do over the past 5 days? See what we got. We'll get to the charts here in a second, but looks like overall we had more of a pullback than we did a progression. Particularly one of those days of the week. It was a short week last week with Martin Luther King Jr. Day, by which the markets were closed. But yeah, we had a little bit of a pullback there. It looks like utilities, real estate, financials being the biggest losers. Energy, materials, and healthcare being the biggest winners. Everything else hovering not even close to a full percent. I mean, the closest one was 0.4 on XLK Tech, and that was 0.5%. So closer to zero than not. But point is, barely move the needle. So, all right, with that in mind, let's go ahead and move to our charts, starting with RTY here. And I've not moved these lines. These were moved last time, the little bits that they were. I think we do have a couple things we can change. So first off is going to be the all-time high. But look at where that one was. Okay, so all-time high, we'll put that up here. We moved from this volume shelf here, being the next minor volume shelf. And actually, that was more of a major volume shelf because all of this is where we're looking at liquidity. And sorry, not volume shelf, liquidity shelf. But now we've got kind of a minor one in these recent 4 days, just over the past week, Tuesday, Wednesday, Thursday, Friday, right? Excuse me. So we've got a minor liquidity shelf here. We drop to here, and then it has potential to drop back into this range right here where a lot of people will have placed stops below this area. So we're going to move this bottom one as well. This I see is still a much larger liquidity shelf being followed by this one here. And this, I think, is pretty big. But for now, the most immediate ones we're worried about are going to be Tuesday's low. If we get below there, we can definitely start to see it move back to this area. Price kind of consolidated with the lowest area and the biggest liquidity being below this, about 2492.6. So that's the RTY. Let's move over to the YM. Let's see how this did. Okay, so basically here we just kind of moved sideways. We did run down and rip down. This I thought was interesting. So we talk about these liquidity shelves. And when I say liquidity shelf, basically what I mean is I'm looking at the lowest, trade must turn or bust situation before you reach a major, another swing low. Now here with this consolidation across going sideways, it happened to be in this area. Now we said it at the beginning of last week, and then this happened. So the liquidity pool that we were looking at was between this low and this low. So everything in here is liquidity. And what do? We dropped right into liquidity, popped right back up, stayed in consolidation. This is on the YM. Still above the 21. Everything's looking pretty good as far as that goes. No reason to think it's going to be any different for the time being, however. And I say however because, well, we did make a liquidity run. We did have a lot of volatility this week. But more importantly, we did close on the downside, right? And I always prefer if we're going to close on the upside, even if it does open right up and just drop. And I don't know, it's just a mental thing, I guess. I don't really look at it as bias. My bias is actually northward consolidation to up at this point. We do have all-time high. We got that set there. I am going to change. No, I'm going to leave that the same. This was just a liquidity run, so I'm going to leave that there. I will note that this right here will probably be this new liquidity run. If we're going to drop below, this is where these people would have placed their stops. And this is a very minor shelf before we hit a bigger pool right here. So this is the shelf. This is the pool. This is a bigger pool after this shelf. It's like going to different areas in the pool as it gets deeper, right? So anyways, that's the YM. Let's go ahead and move over to the ES, a little bit closer to home. See what we got. All-time high is still the all-time high. That didn't change. We did the exact same thing here that we did over in the YM. The picture is identical. We dipped down below at the beginning of the week. We popped below this shelf that was right here, and we'll go ahead and move this in a minute. And then we got into this pool. Matter of fact, I don't even know why I don't have this marked, because this is where this should actually be, is right here, right? So we dipped right into this pool, right here, off the shelf into the pool, dipped down, came back up, and got back to the averages. Now this one's a little bit below the averages closing, but right at it. We're moving flat and sideways. Haven't started to hit yellow yet, so things, the Fibonacci numbers that make up my moving average are actually in alignment still, showing a more positive momentum than less. However, we are flattening out. Could be a rollover, could not be. We'll see what happens. Plus, we've got the FOMC announcement coming up, and that can definitely be a catalyst in either direction at any point in time. Something to pay attention to. We are going to go ahead and take this and move this down like we did the other one. So now we have this shelf, this minor pool, and then a major liquidity pool. I don't like where that's sitting. That should be more right there. There we go. And then a major pool before we are dealing with another drop. So that's the picture I'm looking at. Again, I am probably more biased towards consolidation on this one for two reasons. We're diddling in the middle, if you will, between the all-time high and a major, or not major, why I keep using that word, and a liquidity pool that this kind of spiked down and set. So I could definitely see us moving sideways through the bulk of the week until we figure out what FOMC is going to do. That's going to be the biggest mover in the upcoming week. I could see that. That doesn't mean it's what we do. It's just something I could see playing out as being a pretty decent likelihood. NQ, let's see what that was doing. NQ, how I love you. That was fun to play this past week. And it is, again, identical picture to the others when it comes to this area for these last 4 days. We dip down into this liquidity area, right off this shelf into this pool, about 50%, popped right back up. Now this one is showing a little different. While we did close above the 21 moving average, we also are seeing a change in the underlying moving averages, switching to being a little mixed up and confused. Now, this could be just same thing you saw here. So here it dipped down, crossed over, came back up and out, got up, and here dipped down, got into some messy territory, came back up and out. Are we doing the same here? It's possible. We're gonna see. But I kind of lean the same way on this one, more towards consolidation than actual up or down at this point, at least until we find out what's going on with the Fed. I am going to go ahead and do the same thing here, though. I'm going to move this right to that liquidity pool, or to where you can visually see that liquidity pool. And while we do have the upper marked here, I'm going to put another line on to show this top. And the reason why is because we also have a liquidity pool up at the top that is more prominent than the others, which is why I'm marking this one. Okay. And what I mean there is everybody that sold here placed their stops up here, and most likely before this here. These people place their stops somewhere up here. But these folks, all these folks selling, they place their stops up here. So we could see a liquidity run into that and then drop back down the same way we saw the liquidity run here into this mess and then pop back up. We'll see what happens. But this is a big range. I mean, if you look between here, which is 6045 and 5027, you're talking about 100 points. I'm an idiot. You're talking about 1,000 points. Thank you. I was like, what am I saying? 100 points. Looking at the 6 and a 5. That's not, yeah. You're talking about 1,000 points, right? So that's a huge, huge area to mess around in the middle. Now, this is a daily chart. It's a daily chart, so it might be easier to day trade by looking at smaller charts. But this is where I wanted to, well, that's where I always, as you see in my videos, get just kind of the 30,000 foot view, if you will, of the markets and where we're going. So we'll get a lot of playable price action over the next week, especially with all the volatility. As always, you know, be patient, be disciplined, trade your system, and remember that your emotions are your biggest enemy in this game. So with that being said, thanks for joining me. We will talk at y'all later, and you guys have a good weekend.